SpaceX setting terms for its upcoming IPO, and Leslie Picker is here at Post 9 with the details that we need to know about, because we're excited about this one. We know what our viewing audience is as well. So what are we learning?
Well, we know that Elon Musk is known for doing things somewhat unconventionally, and this IPO process is no exception. Along with his team, he's decided to market just one price to investors instead of a range. That price, I am told, is $135 per share, and the plan is to offer 555.6 million of them. Those details are expected to come in a public filing in about 4 hours from now. The total offering size amounts to $75 billion, which would be triple that of Alibaba, the current record holder for U.S. listings. I'm told the $135 price tag implies a fully diluted valuation of $1.75 trillion. That valuation would include consideration from the EchoStar agreement to purchase spectrum licenses, as well as a potential acquisition of Cursor. I'm told it does not include much of the $1 billion performance-based shares granted to Musk that vest when the company establishes a permanent human colony on Mars with at least 1 million inhabitants. I'm told that the fixed price was chosen in lieu of a range due to the depth of the testing the waters process with institutional investors in recent weeks. But the big wild card, of course, will be retail, which is expected to comprise about 30% of the offering. That feedback will be collected when the roadshow kicks off, although it can be harder to assess because that cohort is so fragmented. Scott.
We still thinking late next week is what the market is sort of.
Oh, yeah. We would expect an official price. This seems like the fixed price. It is subject to change, though. They could still opt to move it up or down based on that feedback that they get during the roadshow. But the official price should come next Thursday, with trading on and its debut on Friday. And of course, this one's listed at the NASDAQ.
Weiss, what do you make of the fixed price? I mean, you've taken a lot of companies public in your day.
Yeah, a few hundred.
Your well-seasoned day.
Your day.
Look, it's we talked to a lot of SpaceX investors, of which I'm not one, unfortunately. It's not what we do, that, in terms of buying privates that we can't value, and that's the problem. You can't value this. There's no way. It's a question of always who's the marginal buyer when you price. Now, everybody that I talk to, pretty much, not 100%, but most, by the overwhelming majority, are looking for an exit when lockup's over. So when it goes into the index, it's not as if these large mutual funds don't have an ownership stake in SpaceX already. So the add-on buying for it to go in the index,
because so many have already bought it.
Exactly, in the privates.
In the privates.
Right, so we don't know what the appetite is when it goes into the index. Now, it could be in different funds, of course, and likely is. So I think that buying will have to drive it most. So look, it really is a crapshoot as to how this one trades. Anything you say is a guess. We've never seen anything close to a $75 billion IPO. I think the largest we've seen before is $10 billion, with a large part of the constituents who would buy this stuff already having bought it private. There's been unending opportunities to do that.
You talked to David Solomon yesterday about the absorption of these IPOs.
Yes.
Right? What was the gist of what he told you about that?
Well, he basically said that there's more greed than fear out there, kind of talking about just this insatiable demand for all of these equity issuances, not just these mega IPOs that we're talking about, but also Alphabet, which just this morning upsized its equity offering to be about $85 billion. So you got $85 billion there, $75 billion from SpaceX. We don't know at this point what Anthropic or potentially OpenAI will look to raise, but that's a lot of supply hitting the market. And I asked him, is there essentially demand? What do you think is the impact of all this? And he said, well, there's more greed out there than fear, so that would suggest yes. But then I followed up and I said, but how quickly can something like that turn? Because that's market psychology. And he said very quickly.
Yeah, and if you take a look at, if you take a look at the biotech industry, every time it's had a big bull cycle, what's always killed it is supply coming on. Number one thing. So we just don't know. This is going to, and then we have Anthropic and OpenAI.
Well, that's why there's the race to be at the front of the line, or at least towards the front. You don't want to be in the back of the line after maybe sentiment has turned and, these mega deals have been absorbed, and then you sitting there at the end of the line saying, hey, don't forget about me.
I think the important point here, though, is that if you think about the institutional lockups that Steve was referencing, and then you think about the timing, Scott, of when this stock is likely to hit its full position in the S&P 500 from a free float perspective, there's alignment there. And so what you could see is institutional buyers or previous institutional holders, they are going to want to get their liquidity. They've been waiting for a long time, but it could be, at the same time and coincident in this free float with the S&P 500, adding those passive buyers into the mix on the retail side.
Blasted quick.
Yeah, I think the difficulty here is going to be for portfolio managers, because this is going to make a narrow market even more narrower. So it is going to be incredibly concentrated, because here you are adding another technology conglomerate. And then I think the other story is just going to be, does Elon Musk become a trillionaire off of this? I think $138 is the figure that it has to get to make him a trillionaire. So I'm sure that'll be a headline in the story.
Yeah. Oh, I'm sure it will. Leslie, thank you very much.